What's going on, everyone? Today I want to talk about your favorite Shark Tank judge, Kevin O'Leary. Mr. Wonderful, they call him, right? He's a character bit. But I actually want to use him as an example as experts who come off as very big experts about everything, and so then you just kind of take what they say and think that it's automatically right. And I want to show how what he was involved in it was completely wrong. And I also want to show you how he stuck by it. And then at the end, I want to show kind of how there's a silver lining between all of this fiasco that's happened with FTX, Sam Bankman-Fried, and Kevin O'Leary. So let's jump into it right here. So we've got Kevin O'Leary says he lost almost $10 million in the FTX collapse, and that the exchange had paid him $15 million to be a spokesperson or spokesman. Here's the thing. I've mentioned this many times on this channel, that it's interesting how media portrays certain things. Even the fact that they say the FTX collapse, they don't call it a scam, they don't call it a Ponzi scheme, they just say collapse as if it was a business operation issue. And that's not necessarily the case. But anyway, so what's going on here? He was paid $15 million to be a spokesperson. So when you hear these financial experts promoting certain things, athletes are one thing, right? We all kind of know, hey, look, if it's Tom Brady, if it's somebody else, you were paid something and this is not really your field, where you're just kind of using your name. But when you get people who are financial, quote unquote, experts or influential in the financial space and they're promoting certain things, that's different now, because people don't really know that you're being paid for it. They don't. They just think, hey, you're an investor in here, so you have your bias, but you're not being paid to push this, right? And so look, he says he lost $10 million of his own money. Who knows how that's kind of chopped up, right? What assets were in there that he lost? I have no idea. But the main thing is that he's paid $15 million and he lost $10 million, and he also had a $1 million equity stake in FTX, and that's since been wiped out, right? The company's filed for bankruptcy. His equity is worthless like everybody else's. But here's what's interesting as he goes on, okay? He's like, what did he say here? He's like, O'Leary admits that his investment was ultimately a bad one, and that he, along with most other people, was blindsided by gross mismanagement of billions of dollars at FTX. There wasn't gross mismanagement. That was a scam. But we're gonna move on from that. He goes, we all look like idiots. We relied on each other's due diligence. O'Leary said, highlighting the groupthink among institutional investors who wanted a piece of the once hot crypto exchange. So here's another thing. Groupthink and FOMO happens just as much, if not more, at the highest tiers as it does maybe between you and your friend. Everyone kind of talks about it like it's an average Joe thing. But look here, it happens at the highest levels, where one person goes in, every other major institutional investor says, well, because they're in, they probably did everything that they needed to do for due diligence, and they went in, I'm in. And no one really looks deeper into anything. And so all these guys who are on Shark Tank, like Kevin O'Leary, they would have tore down anything resembling this on their show. Or they tear down many things that are very, very similar in terms of, you know, it's one person kind of controlling everything, and these guys will ask deep questions. They obviously did not do that in this case. They just relied on other people. These guys didn't even have an accounting system. They didn't even have balance sheets. They didn't have a board. They had nothing. And these are all kind of things that these guys would do their due diligence on when it comes to someone on the Shark Tank. So it's crazy, right? So be careful who you take advice from. That's first and foremost. Secondly is, did they do the things that they're telling you about? So if they're saying this is a good investment, did they do the due diligence? If they say it's not a good investment, did they do the due diligence? Right? There's so many different factors. So just because you think someone is an expert doesn't mean you just take their advice and run with it. Okay? But here's the interesting part. Despite vaporizing billions of dollars, that's Sam Bankman-Fried, O'Leary hasn't condemned Bankman-Fried outright, stating this week that an audit needs to be conducted before anyone can say the FTX founder is guilty of anything. Okay, let's read what he said. There's only the murder of my money in this case. If you want to say he's guilty before he's tried, I just don't understand it, O'Leary said. You don't know because you have no data. All I'm saying is let's do the forensic audit. Yeah, there's quite a bit of data of what happened. The fact that they used $10 billion of customers' funds, loaned them out to Alameda Research, who then invested in companies and pumped it back into, and had those companies list onto FTX, and then the money was returned. Like, nasty cycle. They were using their useless token FTT as collateral for so many things. So look, all that data is out there. So for him to say that there's no data, I don't know who he's talking about. But again, I mean, he was paid 15 million, right? He has $1 million in equity and he lost 10 million. As much as he says we were idiots, they don't want to look like they're stupid. They don't. They want to continue to find ways to make themselves look smart, or at least have it where they were blindsided like anybody else would. That's not the case. All right. But here's what, and look, some of that we know, but the $15 million to be a brand ambassador, let's be careful about what we ever believe out of Mr. Wonderful's mouth. But here's what I find very, very funny. Okay. This is a tweet here. And it was like, hilarious watching two very different conclusions these people have to the Sam Bankman-Fried FTX scam. Now, this is Joe Rogan. I'm not going to play it. You guys can check it out. But here's what he says is, one, Joe Rogan, no crypto experience, eating shrooms live on air, understands it was a Ponzi. Kevin O'Leary, professional fund manager, paid $15 million by FTX, needs more info and would invest in SBF again. Sam Bankman-Fried. Now, that part that didn't show in the article, but he's gone on record to say many times that he would still invest as he did before with Sam Bankman-Fried. Knowing everything that we know, he would still do that. Makes you question, right? So it's interesting. If you watch the video, it's pretty funny. These guys are watching an interview live of Sam Bankman-Fried that happened a few days ago. And they're just reporting, I mean, he's just calling it what it is. It was a Ponzi scheme, Ponzi scam. And so he's just kind of high level looking at things from the news, or what the high level details. And there's Mr. Wonderful who's deep in it and calling it something that is yet to be determined, and how he would still support Sam Bankman-Fried. Interesting, okay? But I did say there's a silver lining to this. And that doesn't take away all the people that lost their money and all the heartache and economic pain that people are going through. But long term for the space, here's what I think is a silver lining. Okay? And it may not be what you think. So this right here is a record amount of Bitcoin withdrawals from centralized exchanges. So if you look at this here, this is the total amount right here down at the bottom right. And that is about 371,000 Bitcoin have been removed from central exchanges across the board since all of this happened. Now, why is that even important? Well, because the whole point of Bitcoin is to have self-custody. You own your own asset. They say not your keys, not your crypto, right? And so if you don't have personal possession of your assets, it's not in a cold wallet, at the very least, it's not in a hot wallet, you don't own it. Somebody else owns it and has the rights to it. They can freeze you out, they can cancel you, they can do scams, they can go bankrupt, and you lose everything. So unless you own it yourself, it's not yours. And that is the very purpose, especially of Bitcoin. That's the very purpose, is to give the average person a shot at generational wealth. But the only way you have a shot at that is if you actually hold or self-custody that Bitcoin. And that's a very important point. So when you look and we have 371,000 Bitcoin removed from exchanges, that means many institutions, people are taking their Bitcoin off of these exchanges and self-custodying it, which is the whole point. All right. And what I want to show from this actually is, what would 371,000 Bitcoin look like? Okay. And so Bitcoin right now is about 17,000. Let's call it 17,000. All right. So here we go. Let's see what that turns out to be. And if we do 17,000, and we're going to times that by 371,000, and we get around $6.3 billion worth. That's USD. $6.3 billion of Bitcoin have been taken off of exchanges. That is a hefty sum. Still not as much as Sam Bankman-Fried gave out of users' funds, but 6 billion is still 6 billion. So the very fact that a Ponzi scheme spurred people to do what anyone in the space for a long time has been saying is you have to self-custody. It is a painful lesson, but it's a lesson that once you learn it, you can never unlearn it. And so now there's a whole bunch of people in this world who are deciding, I need to hold on to my Bitcoin. And there isn't a bigger silver lining than that.